Hey everybody, hope everyone's doing well. This is going to be a recap of the Emini 5-minute chart for Wednesday, March 26th, 2025. And as usual, the purpose of these videos is to try to help everyone better understand how to read and trade price action with a focus on breakouts and second legs. Yesterday's video, I mentioned the daily chart. I mentioned it for a reason. I thought the market was approaching an area where there might be interested sellers. And by that, I mean bulls and bears looking to sell. Tight bear channel, second leg down likely, but getting far from the average price. You could count 3 legs down, parabolic wedge, 1, pullback, 2, pullback, 3. You expect a minor reversal, and then we got this minor reversal, strong enough for a second leg. I talked about this yesterday. Small second leg, but not symmetrical, and then the gap up in these bars, symmetrical second leg. So the bulls have 2 or 3 legs up, but we're expecting a minor reversal. We're expecting another leg down for the bears. And the bulls, because this is a late leg against a strong trend, the bulls really need momentum. Because the best the bulls can hope for here is a trading range. It's unlikely. Bear trends usually don't become bull trends. This is probably going to evolve into a bear flag or a trading range. And for the bulls, best case, it's a trading range. Maybe we eventually get the bull breakout. But for now, as soon as the momentum dries up for the bulls, they may look to get out. Bulls who bought down here, anywhere lower, scalping out. We're testing resistance. We're just testing the moving average. I'm sure there's other resistance, maybe coming up on 50%, not quite there. But the point is, second or third leg up, then a doji bar, bad follow through. And then if we look at the 5-minute chart, bigger picture over the past couple days, I like to zoom out and just let's think of this. What's the market cycle here? Well, it's a bull channel. You can call it a broad bull channel. The market is creating higher lows and higher highs, but the pullbacks are so deep and strong enough that the market may even flip to always in short here. You get a couple of legs down, same with here. So it's not a very strong bull trend, but it is a bull trend. So broad bull channel. When we think about the market cycle, do we expect the broad bull channel to get a bull breakout or a bear breakout? Channels evolve into trading ranges. You can think of bull channels as bear flags, even if there's not a bear trend before it. So you expect the bear breakout, you expect that eventually we'll come back down and test the start of the channel, often becomes the bottom of the trading range, or at least some kind of support. And remember, support is just any price below the current price where you expect to sell off to pause or reverse. Why am I saying all of this? I think it's all important context for today, so we'll get into it. So let me just make a note. This is the March 24th low. Let me just turn off the snap, just so we are reminded what this support level is. And then in blue, that's yesterday's low. The prior day's high and low, often important support and resistance, but often they're tested. Most bars are breakout bars, meaning most bars are not inside bars. So that market's a fractal that includes the daily chart. So most days test the prior day's high or low. The low often becomes support, but if the support fails, it becomes resistance. So maybe I'll take half the chart at a time. And first, let me take a look at Globex. So here's the context going into the day. Basically, a horizontal trading range. We had a rally, bad follow through, then a big channel testing near the breakout point, testing support, up and down, going sideways. And here's the information we have going into the regular trading hours day. Now it's possible the bulls need a second leg up. Decent rally here, pullback, attempt at a second leg, another pullback, it's a reversal attempt, and now the bulls have a high too. And they may get another leg up, and who knows, maybe we'll test the Globex high. It's possible. There's an attempt at it here on the open on the first 3 bars of the day. But then let's just get into the 5-minute here. I just want to talk about the Globex context a little bit so that we can understand what happened on the open here. And you don't even need the Globex, really. The RTH chart, we can see there's a rally, gap down, it's a pullback. It's about a 50% pullback. And the bulls get a second leg. This, bars 1 through 3, can be considered a second leg up. 1, pullback. 2, testing resistance. So the bulls, at this point, if you're buying here, might be dangerous to buy. Buying at the top of the range, and really not great momentum. Doji, bull trend bar, but lots of overlap, another doji. And then 4, strong bear bar, probably always in short, occurring more toward the top of the range with room to the bottom. If we're going to test the prior day's high or the prior day's low, what's more likely? At this point, it looks like we're going lower and then follow through selling. Breakout follow through, you call it a 3-bar micro channel. Strong enough selling, probably will get a second leg down and at least a little more to the downside. It's possible that this is an expanding triangle. So the bear breakout down to bar 6 could simply be a sell vacuum test of support. And we're testing the bear channel line of the expanding triangle, and we're testing yesterday's low. But still strong enough sell off, second leg down likely. First reversal will probably be minor. I got to speed it up a little bit here. Second leg down to bar 11, but tight bear channel. Really minor reversal here, not a significant trendline break. Better for the bulls here, but let me clean up the chart. Is this a major reversal or a minor reversal? Is this what it looks like at the beginning of a major trend reversal? Probably not. It depends on how you draw the trend line, of course. Different computers draw it different ways, but it looks like we have a trend line break here, but it's more sideways than up, and we do not have consecutive big bull bars. We hardly have bars touching the moving average, never mind getting completely above. When you compare the bull bars, and we'll give 17 credit, it's a decent bull bar, but the other bull bars really small compared to these big bear trend bars. And look at all the overlap. These are all minor breakouts. 12, good looking bull bar, but much smaller than the breakout 10 and 11, and much even smaller than the entire sell-off. Also, what leg is bar 19? Rally, pullback, 17, bull breakout, bad follow through. Another breakout, but that's 3 legs up, sideways to up, to resistance, the moving average, in a bear trend. Not ideal to look to buy here. And then low 2 short, you can call it a low 2 or a low 3, bar 20. Not a good signal bar, but context is good. Bears get a new breakout down to 24. Is 24 a late leg? It might be. But this sell-off probably resets the leg count to some degree. I've mentioned it before recently. This is still something I'm working on. But I've had more time to think about it. And the more the market is trending, the less the leg count matters in the direction of the major trend. So I think it's still really beneficial to count the legs counter to the direction of the trend. I talk about that in the leg counting video. Do you really want to be counting legs down, or is it more important to count the legs up? Reversal attempt 7, second reversal, bar 9, second leg for the bulls against a tight bear channel or bear breakout, probably will fail. 1, 2, 3 pushes up, but tight bear channel, first trend line break, probably minor. Same here, rally, pullback, rally, sell off. So this might be leg 3, 1, 2, 3, maybe leg 4 here. But the stronger the trend, the less important the leg count is, because the leg count constantly gets reset. I said the leg count gets reset to some degree here. It's hard to not see the channel, but is this really a wedge bottom you want to buy? Just compare selling pressure to the buying pressure. Do you really want to buy above 26? Probably not. Another strong breakout down to bar 30 probably resets the leg count again to some degree. Yes, it might be 3 legs, 1, 2, 3. Sell vacuum test of support. Remember the March 24th low? You expect some support here, but the approach was really strong. If you bought on a limit order here, you're probably disappointed with the approach, and it's probably not wise to just blindly buy with a limit order at this support level. You expect a pause at least, maybe a reversal, but we need more information. Does this look like a major reversal? No, it looks minor. 36, decent bull bar, but can it get follow through? No follow through. So that's 2 legs. 1, pull back, 2. 3 bar micro channel. So again, is this a major reversal or a minor reversal? It kind of looks like this, right? Lots of overlapping bars, sideways to up, not a strong trendline break to the upside, more sideways. We're still completely below the moving average. Bull bars, not especially big, no consecutive bull bars. Bull breakout bars not getting follow through. It's against the market regime. It's a strong bear trend. So support, yes, but looks like minor reversal. Bears taking profits, but not enough for the bulls to buy. So we get a give up bar. And follow through. 41, 42. Might be a late leg, maybe leg 2. But still, this breakout probably resets the leg count to some degree. Breakout point, bar 30 low. 43, rally, pull back. 45, rally, reversal. 2 legs up to a breakout point after a strong bear breakout in a bear trend. Odds favor lower prices. Now, maybe 3 legs down, but still, we're going to keep seeing wedge bottoms in a bear trend, and that's not the way you want to look at it. If anything, if you're counting legs, you want to count the legs that are counter to direction of the trend. If it's always in short, you count the bull legs. You don't want to count the bear legs because you'll keep seeing wedge bottoms, and buying above 47 is a low probability trade. The risk reward might be good, and it depends on what kind of trader you are. But for me, I prefer higher probability. So I prefer to not take trades like buying above 47. In this case, it did not even trigger. The tight channel is continuing. 51 rally, but not a significant trendline break. We did pull back a fair amount. This might be enough for a second leg up, but I think if we do get a second leg, the rhythm has been 2 or 3 legs counter to the direction of the trend, and then a sell-off to a new low. 1, 2, 57. Now a decent 3-bar micro channel, but still counter to the direction of the trend. Probably more sellers above. Bulls get some follow through. This is a variation of a spike and channel trend. Probably pull back and test the 58 low at a minimum, and we may have to fall all the way down to a new low. And this might be a bear flag. And the bears quickly undo what the bulls had going. Here, strong enough breakout, second leg down. Likely, might be a late leg. 1, 2, 3 major legs down, so you might get a minor reversal. But that minor reversal can be fairly deep. We may pull back all the way to test the top of the most recent leg down. $67, trendline break, but weak. Retest of the lows, traders buy. 70, a decent reversal, might be enough for a second leg. The trend may be weakening at this point. We've gone down for a lot of bars. The channel was much tighter up here, becoming more broad here, but still fairly tight. But now at this point, compare the pullback here and here to here and here. You'll notice stop order bulls can make money here and here now, so the trend is getting weaker. 69, that's a breakout point, the high of 69. Probably buyers here on the retest and a second leg up likely. You can see the reaction there. Second leg up. Upside probably limited. 75, 76 look strong, but we're still within this sell-off, and this is still probably a trading range or a bear flag. Probably not a major reversal. And now we have 1, 2, 3 legs up. Maybe you call it 2 legs. Might be a variation of a second leg trap, but either way, we're getting close to resistance in a bear trend. This is more of a sell zone. Bulls who bought lower will take profits, and this sell-off still might get a second leg after a deep, complex pullback. So we can see the reaction there. Ran out of time, but I suspect at this point we'll start to go more sideways to down and increasingly begin to go more sideways as the trend weakens. I hope that video was helpful. That's going to be it for this review. Thanks everybody, and I hope everyone has a good night.